Today we're going to be talking about a company whose average customer spends $8.1 million per year on contracts. That is Palantir PLTR Stock. Hey guys, welcome back to Sky Talks Trading. My name is Sky and I am on a quest to invest. Today we're going to be talking all about PLTR Stock. Now this is a stock that has been clinging to its long-term uptrend. It's also a stock who has a billionaire co-founder that is somewhat under fire. With all that being said, can PLTR recover? It's actually quite a divisive stock because depending who you ask, PLTR stock is either a real steal at the current price or it's 50% overvalued. It has a huge popularity amongst retail traders, that is very clear. And after its NYSE listing on September 2020, Palantir Technologies enjoyed an almost one-way ride to $45. However, after setting that record in January, the stock has trended broadly lower in often volatile conditions. And although it has seriously underperformed so far in July, and it is currently 19% below its peak in May, I think this is, in some part anyway, because of the criticism aimed at the firm's co-founders. There was a lawsuit brought by investors, and it claims that the billionaire chairman Peter Thiel, CEO Alex Karp, and President Stephen Cohen's 49.99% decision-making power is unfair. As well as that, the plaintiffs suggest the trio's flexible Class F stock effectively makes them emperors for life. So I think that could be definitely a reason why it's been underperforming so far. But I think all that is about to change. If you ask me, PLTR's only real problem for the foreseeable future is hiring enough qualified people to manage the overwhelming amount of new accounts under contract and projected to be new clients. This is their only limitation on hyperbolic growth. The other tech giants have already bowed to Palantir's superior software platform. They just can't compete, if you ask me. And I've noticed that the daily volume in the last several days was playing around 17 million, 20 million, 22 million, etc. And this is a kind of a low volume, which to me means that sellers are not willing to sell their PLTR and their diamond hands are staying strong until PLTR goes back to the upper 20s, 30s, etc. You will see a volume of over 100 million when PLTR reaches $27. And also, let's not forget, August 10th, they have their earnings report. And we all know that PLTR has great revenue, many new contracts, a lot of new clients, and great guidance. So taking everything into account, I think we can expect the earnings report to beat Wall Street estimates. A lot of people might not realize that the company is building business here. You know, it'll take time, years. And the CEO said that many times. Rome wasn't built in a day. A company can't be built overnight. They have the working government-oriented side with a good moat. When it comes to the commercial side, which is the future of this company, it's just starting to rev up. And if you buy PLTR stock, you are buying a starting business. Well, not quite. I mean, the government-orientated part of the company is a nice bonus. So you aren't paying for a startup without revenues, as is the case with many other newly listed companies nowadays. The price is taking into account future cash flows. So is it overpriced? No. If you ask me, which I'm not a financial advisor, this is just my opinions only, it's undervalued. If you want to use conservative Grahamian value metrics, you will not get a company of this quality. You know, I mean, even in Graham's times, you bought only companies of questionable quality for a bargain price. If you want to buy a company as good as Palantir, you always need to pay a premium. Another concern that people have is about scalability. PLTR is definitely scalable. If using PLTR gives you an edge over competition, and the size of that edge will become bigger with developing Foundry further in the future, it will become a must-have for companies to have a platform which helps to better analyze data and then act upon that data. Palantir is spending a lot of money on investments and bringing on customers in its acquire and expand phases, so it hasn't yet been profitable. However, as Palantir moves more customers into the scale phase, its financials have begun to improve. In Q1 2021, its adjusted free cash flow grew to $151 million from minus $290 million in the prior year. With free cash flow turning positive, Palantir is expected to turn its first profit in 2021, and it's guiding for at least 30% revenue growth over each of the next 5 years. Investors could see Palantir produce rapid earnings growth as revenue begins to outpace expenses by a wider margin. The stock traded at a price to sales ratio, that is PS ratio, of nearly 50 times in early 2021, but the stock has pulled back to a PS of 27 times. So you'll definitely want to keep an eye out on how these investments translate to long-term revenue growth for Palantir, which continues to be a high-risk, high-reward stock. So guys, if you want to check out my other 2 Palantir videos, I'll link them down below. I go more into fundamentals and the products and stuff like that. So if you're totally new to PLTR stock, definitely check those videos out. But thanks so much for watching, guys. I know I've been absent for about a week now, I think. I was actually partaking in the Olympics. No, I'm just kidding. My internet was down and it was really annoying, but it's back now. Until next time, guys, have a good day and stay safe.